Hi everyone, Dan Tyler here again. I hope you're all doing well. Out of any time, I think now's the perfect time to really start trading, especially the type of markets that we're in, and also we're stuck inside from all the thunderstorms that we keep getting around the UK at the moment. So yeah, stay inside, guys. Keep trading. I hope you're doing well. I just thought I'd go through a video today with you guys on the Aussie Kiwi, so the AUDNZD pair. I've done some analysis on it already, and it's a relatively choppy market at the moment. From as you can see on the screen right now, it's been relatively choppy for the last 6-7 years. But I'll go through the analysis, and hopefully it'll be useful for you guys. So we always start off on the higher time frames, so on our weekly chart. As of next week, I'll be looking at the monthly chart as well, as that's when the monthly candle will be released. But just having a quick zoom out, we can see that this market is definitely capable of trending. It hasn't been ranging throughout its whole lifespan. However, since 2013 time, it has been quite choppy, ranging wise. And we can see when we zoom in over the last few weeks, we have had a sharp buy up, and we've just had a bearish candle pop up, which I think is relatively interesting. So I did my analysis to kind of figure out why we're getting this bearish candle here, and what the pair is looking to head towards in the next coming week or so. So what we always start off doing on the higher time frames is we always have a look to spot any channels, so any chart patterns. And channels are very effective in the market. So I'll just see if I can point these out for you guys quickly. So that seems like quite a reactive line there. I think that could be changed actually. It's all about finding the line of best fit, as I've explained to you guys before. That seems a little bit better. We've got 3 touches on the resistance, 2 on the support. One of my rules is that there needs to be at least 2 points of contact to figure out if it's a channel or not. There's definitely a few more lines on the inside. Definitely one there as well, and maybe one up here too. Perfect. So you can see just by drawing your channel in, it definitely builds up a bigger picture on where the market is reacting, what the best price to either buy or sell at is. And we can see that it has been reacting in a descending channel since 2017. And over the last 4 or 5 weeks, it's had a bounce off of this channel support line and has actually broken through this channel resistance. Normally, what we see when a channel line is broken, if it's definitely defined as a channel, that the market sometimes likes to come back, kiss that level, and then shoot off again. And just to see whether this is viable or not, when we zoom out, we can see the range which this market has been moving in, and it's gotten to the highs of up here. So it's definitely possible for this to have a kiss onto that level and go even higher, maybe up to these levels around here, maybe up to anywhere around these levels at the moment. But I like to just kind of keep as present as possible and just see where is it likely to react right now. So I'll just quickly get rid of that. Just bear with me. So we'll take a zoom in and we can see that this descending channel has been very reactive. We've broken that. We're looking to potentially kiss this channel line simply because we've had a really nice bearish candle pop up. So within the next week, I'll actually expect to see some downside movement towards this level for it to potentially react and go that little bit higher. So just to confirm what I'm thinking, normally I have the moving averages on my my chart straight away. However, as it's been a ranging market for so long, the moving averages are effectively useless as they're a trending indicator. So it's just that they appear as flat. They won't really be well used as dynamic support and resistance anywhere. So I've just decided to take them off just to make it a bit clearer on what's exactly going on in the market. So what we'll do from here is we'll put in our weekly levels just to see if there's any support and resistance in the way. And we can see here that we actually have had a rejection off of a weekly key level here, which does, and it's been quite a strong rejection. Wick about the same size as the body, and it's closed very near the lows of the week, which is suggesting there's a lot of bearish sentiment in the market. And with that in mind, it kind of clarifies, especially with the confluence of the support line here, that we'll be looking to have even more of a rejection to kiss around this sort of level. So it's building a picture that the market is looking to go down to this level in my eyes. And if we look in the past around this level, it has certainly been reactive, and we have had overextensions on that to potentially hit here as well. We do need to keep that in mind. But in general, it's definitely been reactive, acted as both support and resistance, which kind of clarifies the strength of this level as well. So as we've had a sharp buy up, although we've been in a ranging market for so long, in the last good few weeks since the start of 2020, we have actually had quite a nice little uptrend. So we've had a big buy up there, had a pullback, and we've started to have that extension. And as we all know, the market moves in waves. When the market moves in waves and when it's trending, an indicator that I do like to use is also the Fibonacci. So as the market has been going up, it's been trending upwards. I'll actually put in the Fibonacci just to make it a bit clearer. I'll put in the trend lines first, actually. And we can see that we've definitely got an uptrend. It's gone straight up. We've had a rejection off this level, and we've actually got even more confluence there. Look, we've gone far away from the trend line. We've had a rejection. It's just looking to come back and round this level here. As you can see, we're looking to for the market to come to that level by the looks of it. So this nice rejection candle just confirms that we're looking to maybe have another bounce off of this trend line, which is nice to see. And as I was explaining before, I would like to put in a Fibonacci actually. So the Fibonacci basically explains that the market moves in waves, and it moves in A, B, C, D movements. So I'd just like to see what kind of cycle the market is in. Is it in its A, B, C, or D movement? So I'll put in the Fibonacci here, and we can see A was here, it's gone up to the B, pulled back to the C, which is a red level. So in that case, when it pulls back to a red level, it's color coded. So then you reach the target of the red level also. And depending on what your setup is, you can change the formatting so you can see where your target will be. So the target is there, quite far out the way of a bit of choppiness and more key levels there. But we can see that the market is in the cycle of its D extension, looking to go up to this sort of level here, which is nice to see considering that we're in an uptrend. And if we zoom out just to see if it's realistic to hit that level or not, is it confluenced with any of the previous highs? Yeah, I mean, it's gone higher than that in the past within this range. I think it's certainly possible for us to hit that level, but we do just have to keep in mind how the market reacts around these key levels here. So that's kind of it for the weekly. I'll then go down into my daily and we'll see what's going on there. So I can't really see any channels at the moment. I'll take a quick zoom out just to double check. You can put in the same channels as before, really. Actually, I'll quickly do that just for context. Then we can see how it's actually reacting with the channel in the future. Put that there. And it's all about trying to be as precise as possible. And we can see here that even on the weekly, we couldn't see the fake break. On the weekly, it was just a simple rejection, but on the daily, we can see that that was actually a really nice fake break there. And then that's another one. Put it there for now. Okay. So now we've got our weekly channel on the daily chart as well, and we can see that we've had that sharp buy up as I was explaining earlier on. So we'll put in our uptrend lines just to see if that uptrend is confirmed and see if we've broken any inner trend line. Maybe doesn't look like we have, but it's always good to put them in anyway. We can see that we've actually got an outer and an inner trend line here. We've got two inner trend lines actually. And we've had actually a very, very bearish day on the last day of the week, so on the Friday. It looks like there's a lot of downside momentum heading towards this sort of level here, which is actually really nice to see. And I'd also like to see if there's any support and resistance in the way as well. So I'll pop in some support and resistance on the daily chart. And a good thing about this is that depending on your format, you can always change the color of it as well. So just for the sake of doing so, I'll put it in medium slate blue, look. And then we've got some different color support and resistance just to have a nice change of view. So we've actually had a bit of a rejection off of some resistance up here. We're not necessarily in a choppy area, but there's definitely some reactive zones that could stop this currency from getting down to here. However, if you look at how strong this level here is, there's so much support in the way that it's very unlikely that this currency is going to break this level anytime soon. So the lowest I'm expecting this currency to go is around this channel line and this support and resistance line, because this is a very, very choppy and very, very reactive area. And we can see that as we go back. The only time it's actually cut through it is recently. We've had a really strong rejection there, the same here, and again, strong rejection here after a bit of choppiness. It's acted as both support and resistance, and it's generally a very reliable, high probability support and resistance line. So if the market does come down to this level, confluence with the trend line, I'll be very confident in taking long positions from that moment onwards. But at the moment, we're in that cycle of coming down to the trend line to potentially have a bounce off of that. So in the next few days at the start of the week, I'll be looking just to get a few shorts in just before we have that final D extension up to the Fibonacci target on the weekly. So that's really what I was going to do for the daily as well. We can then actually just have a look at price action on the 4 hour too. So if we have a look at price action on the 4 hour, there's different ways sometimes that I like to do my trend lines. The London Trading Institute tool is very, very good for figuring out what kind of cycle the market is in. On if there's been an inner trend line break, then we know that there's an 80% chance of it going to that next trend line. So if I put in my uptrend lines from here, we can just have a double check, and we can see that on the 4 hour, we've been in uptrend, and the three inner trend lines have been broken. It broke, came back, retested it, did get a little bit overextended, but I do class this as some sort of retest, and it's now falling towards this trend line, the outer trend line, and there's an 80% chance of this doing so. And something that people may well spot with price action as well is this is actually a very common chart pattern, and this is quite it's mistaken on how it's used sometimes, and Andy has gone through this before. If you were to see this pattern in a range, it's just simply a range, but we can see we've gone in an uptrend, quite a sharp uptrend at times, and then we get this double top. And this looks to me like a textbook double top on the 4 hour, simply because it's at the top of a trend. We've got the left top higher than the right top. We're currently testing the neckline down here. We're currently retesting that neckline. What I'd like to see is just a little bit of a break and a retest of that neckline for it to come down to here. The way that we trade this chart pattern is that we always wait for the confirmation of the retest. That's what I always find is better anyway. And also you take it down to about 80% of the length or the height, shall I say, of the top. So if we just take a quick measurement on what that will be. And we'll just shorten that down. So from there, we're looking for about, yeah. So we don't expect it to fulfill the full 100% of the height of the chart pattern, but we do expect about 80% of it just to be safe. And we can see that that actually takes us down perfectly to around the 200 moving average and also the outer trend line. So this is great confluence showing that we are looking to head down. And then once I've figured out the price action, which it seems like we have done by looking at this right now, I can actually take a look at the MACD, which is also a trending indicator. And I've explained this in one of my previous videos about seeing MACD divergence. And we can actually see that again here somewhat. I wouldn't say it's no, I wouldn't class that as divergence, to be honest, because we do have a higher high and then a lower high, and that's replicated here. It's just a little bit more drastic. So the MACD doesn't show any divergence in my eyes. There is just a big difference there. But one thing that you can consider is when the MACD is used in a trending market. Sometimes when the MACD line reverts back to the zero, this level, it can show that the market is potentially building up energy. And we could see some sort of consolidation around here, and it's building up energy to shoot off again. So with this sharply moving towards the zero line, it's giving me some sort of implication that the market may be building up some energy after it's fulfilled this chart pattern. But we'll just see how we go. The MACD is definitely good to use in a trending market, especially when you see a double top, just to see if there is any divergence there. But it seems to be reverting back to the zero, so we could see some sort of shoot up uh, in the near future. And what I would expect to see is actually the weekly channel support line as well that's recently been broken to confluence with this area. Um, and that's what I would expect, and it looks about the right length. So if we just double check, we can see that the channel support is around the 108,392. So we'll have a look at the 108,392. Yeah, around there. So that's where the channel support line is. So it's definitely all confluent, and we're building up a very strong picture of where this market going. It is going within the next few hours, going into days, and then going long in the next week or so. And then something that I'd also do is just quickly pop in my 4-hour support and resistance levels. Just builds even more confluence. There's so much room for movement. There's nothing really getting in the way other than the moving average here from it going to this trend line. So it looks like a very high probability trade if you were to go short on this on lower time frames, for you to actually get a short or so in towards this level. But I do expect quite a good reaction here. Um, Another way that you can draw your trend lines, and this is something that I actually like to do on the hourly chart and only on the hourly chart, because I find that it pinpoints my entries a little bit more. And I'll show you how I draw these. So on the indicator, it draws your trend lines from wick to wick, and it's great for pointing out what kind of cycle the market's in, whether it's broken in a trend line or whether we are heading towards an outer trend line, etc. But just to pinpoint my entries on the hourly, I sometimes like to draw my trend line slightly differently, where I cut through the bodies of the candles, cut through the wicks of the candles, sorry, and focus on the candle opens and closes. So what I do, I draw it like this. And again, I always try and have at least 2 points of contact when drawing my trend line. And you can see that there's some slight overextensions in there. And then I'll just quickly have a look to see if I've got the candle. Yeah, so I'm not cutting through any of the bodies, but I am cutting out the wicks, as you can see. And as I cut out the wicks, what that's effectively doing is cutting out some of the noise. So I'm effectively pinpointing a good price, an accurate price in the market that's going to be the most reactive. And then it allows you to actually wait for a candlestick close to then start entering a trade, as that builds up confirmation on whether you should enter or not. So as we can see here, although my trend line is drawn slightly differently compared to the rest, on the hourly, it'll be around the same sort of area. And as soon as price comes and touches this trend line, I'll actually be looking to buy. In the meantime, if there is a short position available, which we can certainly explore, we could short it towards this trend line. But sometimes you can class patience as a virtue, and therefore we can be patient to kind of wait for the bigger move up. So I'll put in some support and resistance levels on the 1 hour as well. Here we go. So we have had a rejection off of a strong hourly level, and it looks like we are heading down. It will be nice to see a break of this level as well, but I think this acts as actually as a very good neckline for the double top that we explored. So to see a break of this level and just a retest for it to come down to this sort of area would be perfect. And this is actually quite a good reward to risk sort of trade, simply because you've got the trend line here, which seems to be very, very reactive in this market at the moment. And also just below that, you've got another key hourly level. So you could enter this trade around here and even put your stop loss behind this level, or if you want to be a little bit more conservative, around here. So your risk to reward is significantly higher, as this is actually a relatively safe place to put your stop loss, depending on what your risk appetite is. So that's what my risk appetite is. I'll probably be putting it around here, just to have that extra little bit of kind of stability and safety, to kind of ride it up at least until this level, and we could see a break and maybe a retest of that there. So that's kind of it for the Aussie Kiwi guys. Again, we're in a choppy market on the higher time frames, but as we've been trending quite significantly in the past few weeks, it looks like this currency could be heading higher, which is nice to see. If you guys have any questions on it, please feel free to drop me a question, drop me a line. I'm happy to answer anything that we have, and so is everybody else on the team as well. We're happy to help wherever we can, and all feedback is appreciated. So I hope you guys have a good weekend and have had a good week, and I'll speak to you guys soon. Thank you very much. Bye bye.